Unrealized losses on lenders' balance sheet, okay, of U.S. banks. That, I mean, clearly there's something wrong there. Going all the way back to about 2008, the last recession, you could see this is talking about basically the bonds, the long-term bonds that banks hold. Because bonds are kind of wonky right now, because yields are so much higher, the older, longer-term bonds are kind of like worthless. Not worthless, but if you were to sell them, you would be selling them at a loss, okay? So you go back all the way to 2008, and then you come to 2000, basically 21, 22, 23. Basically, the banks, if they sold everything that they had, all the long-term bonds that they hold, they would be down $400 billion. Okay, so that's concerning. This is what brought down the three major banks earlier this year, because they put all their cash into Treasury bonds and then they couldn't sell it when they needed the money, right? But this is showing the rest of the banks out there, they're all in the same situation. None of them could sell their long-term bonds, because if they did, they would end up losing money. So this is actually very, very concerning. If you think about it, these banks are not doing well at all, and they're being propped up by the FDIC and propped up by the Fed. Here's another one. The ultra long duration U.S. Treasury bonds. Look at it. It is down over 60%. So these long-term ones are they're getting hammered. So who owns like 30-year bonds or 20-year bonds, right? Like, it's usually the big institutions. Usually, retail investors do not buy bonds. I take that back. Maybe there are a lot of people, but those people that are thinking, oh, I'm buying a safe bet, something that's going to mature in 20 years, and I'm going to collect my 3 or 4%, right? Well, if they were to sell now, they'll be down over 60%. Okay, so it's absolutely horrible. So there are a lot of analysts now that are saying this is very similar to the 2008 financial crisis, when all these long-term bonds or treasuries started falling because they were worthless. So now people are starting to get worried. Here's another one. Long-term treasury fall from 45% from peak, right? So the bond market is kind of worrisome right now, right? There's a lot of markets that are worrisome. People say real estate might crash, right? I don't know if that's going to happen really. And then you got the commercial real estate side. Now you got the bond side, right? And this is all consequences of everything I've been talking about. All I know is this: long-term treasuries are like worthless, because short-term treasuries now give such a high yield. And the reason why that is possible, because currencies from other countries are failing even worse than the US dollar. So it's like this weird thing that's happening. And of course, it's also affected by the Fed and their accelerated rate hikes, right? And that is because of the high inflation, and that is because of the overprinting that has happened over the last few years. You see how it's all connected, but now it's all coming to like this house of cards moment where one thing gets knocked out and everything's going to get knocked out, right? It's almost like that. So it's actually, I wasn't exaggerating. This is serious. This is serious stuff. Are more banks going to fail, right? If banks fail, it's good for Bitcoin, but who knows? If the commercial real estate market falls and then the bond market falls and everything falls, yeah, we're looking at a 2008 financial crisis again, right? This is not what we need. This is not how it should go. Things should be getting better. And as we move forward, we should be recovering. But there's still a lot of warning signs, a lot of, I guess, alarm bells going off right now. And people are scared. People are really scared, which is why if you look at like, say, equities for this year, it hasn't been doing good at all. You look at everything, besides a few tech companies that has done well, like Apple and Microsoft and Tesla. But if you look at the overall sector of everything, especially year to date, it's not good. Most are even or in the red, right? But guess which asset is leading the way? Bitcoin. Bitcoin is still up 62% year to date, right? We have come off from our bottom. We're still holding at 27,000 right now, still looking strong. So the more this happens, the more people realize that Bitcoin is the way. Bitcoin is that store of value, the safe haven against not only inflation, but all the shenanigans that's going on right now, right? So there's a lot of concerns. Let's see. Yeah, now the market is turning worse. Today could be a really ugly day because of the jobs report, fears of another rate hike, bond market going all screwy, banks maybe collapsing, right? There's just a lot of scariness. And all of this caused Satoshi to create Bitcoin back in 2008. And now we're getting a repeat, basically. But this repeat, if it happens, is going to be much more disastrous than 2008. Okay, because now our government feels like they could just print as much money as they want at any time without consequences. But there are consequences, right? So, yeah. But anyways, it's scary out there, but Bitcoin is not. Bitcoin is not scary, which is why we all continue to hold Bitcoin and continue to accumulate Bitcoin, because Bitcoin is the way. It was created to go against all these things, right? You can't artificially inflate it any more than its schedule. You can't control it. You can't shut it down. You don't have to worry about bad actors doing bad things, okay? And the thing is, it's still so early. Look at Bitcoin here. Look at Bitcoin versus equities versus real estate, even gold, money, debt. It barely shows up on this pie chart. That's how early it still is. People that think, Bitcoin's already too big. I mean, versus everything else, it doesn't even show up, right? But as we move forward, 10, 20, 30 years in the future, right? You're going to see that pie get bigger and bigger and bigger and bigger and bigger, right? First thing is to surpass that gold, that very small slither, which is around 12.2 trillion. Bitcoin is only at 0.4 trillion, right? That's a long way to go. Bitcoin has to be 700,000 each just to get that small sliver, just to get to the 12.2 trillion. But what about all the other asset classes? What if just a tiny little bit of real estate comes in, or a tiny little bit of equities also come in, driving Bitcoin maybe up to 20 trillion, 30 trillion, 40 trillion in the future? Who's to say it won't happen, right? It's still so early.